Hello and welcome to the GST Centimeter. I'm Shereen Bhan. The two-day meeting of the GST Council kicked off in New Delhi this morning with Finance Minister Nirmala Sitharaman at the helm of affairs. Now, the Council is expected to deliberate on a series of next-generation GST reforms, which will include major reforms on rate rationalisation. The central government has proposed a two-rate structure and a 40% tax rate on sin goods. Now, this was also cleared by a group of ministers, and the Council has now started deliberating on the rate rationalisation. The Council is also discussing ways to simplify compliance processes. 8 states governed by the opposition have reiterated their position, asking the union government for revenue protection, which essentially means they want the central government to compensate states for any possible revenue losses. Andhra Pradesh's finance minister, the BJP ally, has pledged support to the central government's proposal. Take a look.
From Andhra Pradesh, we are supporting the major reforms in the GST sector which are being proposed by Government of India. Most of them are going to help the common man and poorest of the poor. They are coming from the food sector, education, health, steel, cement, textiles, all the reforms which are being proposed by the Government of India to bring down the burden on the common man.
Well, that is the Finance Minister of the state of Andhra Pradesh, a supporter and an ally of the BJP part of the NDA, saying that they will support the government's proposal. Timsi Jaipuria is standing outside the Sushma Swaraj Bhavan in the capital. She's, of course, been bringing us all the GST news breaks, not just today, but through the course of the last several weeks. Timsi, what has happened so far in the Council? What are we picking up from our sources in terms of what has now been likely cleared?
Well, as you rightly mentioned, the meeting began today in the morning at Sushma Swaraj Bhavan. Before the meeting started, opposition states were clear. They are okay for the proposal to be cleared on the rate rationalisation, but they need assurances on revenue protection and on profiteering so that there is no windfall gain profiteered by the industries. And this rate cut should actually be transpired directly to the end consumer. Meanwhile, during the day, as we spoke to a lot of sources, they are indicating key decisions on ease of living and ease of compliance have been approved, including allowing a GST registration within 3 days for non-risky businesses, simpler processes if monthly liability of tax under GST is below 2.5 lakhs. Also, refund for exporters to be expedited in 7 days based on risk analysis, and provisional refund for non-risky taxpayers. So these were some of the key highlights on the compliance side. When we come to rate rationalisation, well, yes, as we are speaking, deliberations are underway. Centre has made a detailed representation on what could be the possible next roadmap for the GST, which Prime Minister spoke about, that is shifting from a 4-slab structure to a 2-slab structure, coming down to 5% and 18% and 40% only for certain demerit goods. Also, a detailed presentation has been made to the GST Council on exempting GST on life and health insurance premia, which is expected to have a revenue loss of 9,900 crore rupees annually. When it comes to the revenue loss estimate for the entire rate rationalisation exercise, that has not been presented so far to the Council. Deliberations are underway. States are now started to speaking as to what they want to say on this proposal. It includes both the ruling party ruled states, that is the BJP ruled states, and the opposition ruled states. These are quite high in number, so each and every state given a chance to speak as to what are their views on this proposal. That is currently underway.
All right, Timsi, many thanks for joining us. We'll keep coming back to you. Timsi Jaipuria there reporting from outside the Sushma Swaraj Bhavan, which is where the GST Council is currently meeting. We're now joined by Najib Shah, the former chairman of the CBIC. Also with us, We've got other guests with us, Saurabh Agarwal, tax partner at EY India, and Abhishek Rastogi, the founder of Rastogi Chambers. Gentlemen, appreciate you joining us here on the program. Mr. Shah, let me start by asking you, 2 days and the GST Council has to make up its mind on a whole host of big-ticket issues. As Timsy reported, it started with addressing the compliance-related issues. We just took our viewers through some of those issues. For instance, bringing down the registration process down to 3 days in case of non-risky businesses, as Timsy was reporting. Also decided to provide an optional simplified registration scheme to grant registration automatically to those whose tax liability does not exceed 2.5 lakh rupees per month. Also easier refunds and so on and so forth. While rate rationalization has got all the attention, actually the compliance-related issues are also significant, are they not, Mr. Shah?
Yes, indeed. They are indeed very significant and essential for GST going forward. But I guess the big elephant in the room is, of course, rate rationalization. And that's what everybody is looking forward to. The state ministers will need to be assured on the revenue implications. But these are other issues which have been discussed and debated are critical for ease of doing GST going forward.
The crucial aspect now is going to be what the 8 states, opposition-ruled states, have been demanding: revenue protection, a way of compensating states for revenue losses. Now, we don't know what the estimate is that the government is going to present or may have presented already in terms of revenue loss on account of the rate rationalization, but estimates suggest, and that's the number that states were talking about, it could be anywhere to the tune of 80 to 85,000 crores. Now, Mr. Shah, do you believe that the likelihood of additional levy, which replaces the cess, which is what opposition-ruled states are demanding, is perhaps the way forward?
I think the concerns of the states have to be addressed, and these are serious concerns. I think a short term and it could be a 2-year, 3-year window within which some degree of compensation will be required. But these are calls I think the GST Council really has to deliberate upon, because that's the only way you'll have all the states enthusiastically participating in what is a major reform carrying forward the GST transformational reform itself.
Yes, all states will need to come on board. Remember, so far, all decisions of the GST Council have been by consensus, have been unanimous. And of course, the expectation would be that this proposal will also be cleared with consensus and with unanimity, as opposed to going down the voting route. That is not what anybody would like at this point in time. Let me go across to Saurabh Agarwal. Saurabh, many thanks for joining us. Have you done the math in terms of what the potential revenue loss could be and what the way forward could potentially be in terms of offering revenue protection to states?
So, Shereen, in terms of the revenue loss, till the time the final rates are out, it's anyone's guess. But based on what is coming out in the media, what we foresee is that the loss should be somewhere in the tune of around 1.5 lakh crores to 1.6 lakh crores. And that is how the other financial institutes have also been talking about. But given that there will be a reduction in rate, and we have seen that reduction in rates have led to people coming into the taxable base and the evasion reduces, which means that the consumption will increase, evasion will reduce. So net, what we foresee is that holistically the loss should not be more than to the tune of 80,000 crore. And of course, overall, we foresee that it will have a very good impact on the GDP. So whatever we are losing out on account of the US tariffs, somewhere there will be a mitigation which will happen on account of the rate cuts which the government is offering. Coming to your second point as to the ask of the states, I think as Najib said, the overall ask of the state governments have been legitimate. We'll have to wait for the center's final decision on this as to whether they will continue with some type of cesses or they will agree on the compensation with the state government. But the ask appears to be more genuine as far as the manufacturing states are concerned, because even when the GST was rolled out, at that juncture of time also, this ask has come in from the manufacturing state, because for them, it is a huge revenue loss as the tax goes to the consumption state.
That is right. And I think there is consensus that there are legitimate concerns that states are raising. This is not just politics. Abhishek, let me come to you. Two slabs, 5 and 18%, and then that 40% slab for special items, demerit goods, hidden goods, call it what you like. Abhishek, what is the fear that we're likely to see an expanded 40% basket? But more importantly, where do you believe that we could see the maximum relief as far as the common man is concerned as we go through this rate rationalization exercise?
So I think first thing, Shereen, the rate which goes from 28% to 40% increases the kitty of the state governments also, because state governments, when they get the collection from the CGST and the SGST, is about 70% of the entire GST collection. So the rate which was at 28% now makes it to 40%. They get a higher percentage of 70%, which makes their collections from these products more than 40% as they would have got in the earlier, before the rate reject. So from that perspective, I don't see a lot of revenue loss to the state would happen, and this needs to be explained to the state because there will be products in this. Now, as far as the cess is concerned on these products, that goes to Consolidated Fund of India, and that will be used for a specific purpose, and that could be used by the center for any purpose which is required for several states at different times. So I think that message must go clearly. Now, as far as the common man is concerned, there are a lot of these items which will shift. And as Timsi mentioned about the health services, these insurance services, this would get a major benefit in terms of the consumer. A lot of these other products also, which are at 12%, goes to 5%. And a lot of these 28% items also, which would be very, very relevant at the time of Diwali, would come down to 18%, such as your AC, refrigerators, microwaves, cars, we are talking about 1200cc and motorbikes less than 350cc. So there will be a major relief for the consumer sector. As Saurabh mentioned, the consumption pattern in the next quarter will get a major boost. So I think from that perspective, the revenue dip will not be that much.
Yes, so that is the hope, that we will see consumption offsetting any possible revenue loss at this point in time. But Mr. Shah, one of the other aspects that is being revisited again is the fact that sectors like auto, etc., saying, look, let there be a uniform slab. Why do this business of below 350cc, 18%, above 350cc? Perhaps 40% for two-wheelers, apparel makers saying the same thing, that why have that line of 2,500, below 2,500 at 5%, above that 18%, and so on and so forth. Do you believe that that is a logical ask, and one that perhaps the council may wish to consider or should consider?
I think the council should consider this, simply because, again, having reduced the rates, you're again introducing classification based on price slabs. And this is never a good idea. It has been there in the past. I think we have always felt that it should not be there. I do hope the GST Council does not recommend rates linked with slabs, and instead has uniform rates for a product, be it in 5 or 8 or 18. I think that's the way to go forward.
Right. Mr. Shah, one of the other aspects, and I think this is a issue that many state finance ministers have raised as well, that, look, we'll go through this rate rationalization exercise, but we must ensure that the benefits actually accrue to the end consumer. Now, that anti-profiteering provision is no longer available because the sun has set on the anti-profiteering provision. Do you believe that there needs to be a way to revisit that in some form or fashion at all at this point?
I think the hope of the central government is that benefits are passed on to the consumers, and they'll be extremely disappointed if this does not happen. And they would also like to ensure that this does happen. Now, the mechanism for it, which was there as an anti-profiteering, which faced a lot of criticism and has now ceased to exist, is no longer there. But I believe that needs to be an understanding with the history that this benefit has to be passed on to the consumer. Not in the exact proportion, perhaps, if they can work out the economics, but definitely a sizable reduction needs to be there to be seen by the government of India. And I think the Ministry of Consumer Affairs will definitely be watching this very closely.
Yes, they will be watching this very closely indeed. The Prime Minister has promised a Diwali dhamaka, and so the hope and the expectation is that this will be passed on fully and as early as possible. And that begs the question, Saurabh Agarwal, if indeed the GST Council were to clear the centre's proposal by tomorrow evening, which is when the Council's meeting concludes, how soon do you anticipate a rollout of the new rates?
So, Shireen, if you have to ask me, I would possibly wish that the rates are rolled out from 5th of September, because from 15th August onwards, we are seeing a wait and watch story as far as the consumer is concerned for multiple products, whether it is auto or whether it is some of the consumer electronics. And if the rates are being into effect from 21st or 22nd September, which was the large expectation as a Diwali gift, then the entire period from 15th August to 22nd September will be a washout period for many of the companies. At the same time, Shreya, I would like to point out on the anti-profiteering part, while the provisions still exist, they have only been suspended, saying that they'll not be accepting any anti-profiteering application from 1st April 2025 onwards. So effectively, while the GST Council never wanted to do it, and in 2024 minutes of meeting also it has been documented, but such a big change which is happening and the ask coming from the state governments, I don't know what is there in the stores. But of course, the industry needs to be very cautious of as far as anti-profiteering is concerned, and they need to pass on the entire benefit. And I believe that India is a price-sensitive market. It will automatically get passed on based on the market forces over a period of a month or 2 months' time.
Yes, Abhishek, the same question to you. How soon do you anticipate we could see these rates being rolled out? Our understanding from the government's perspective was that they're pretty much ready. If the decision is taken by the council, they should be good to go ASAP.
I think the rate implementation, the changes will come in soon. They would not want to wait till the day of the Diwali. I think it will come in soon. It may come as soon as within a week. Coming back to that profiteering element, as far as the provisions are concerned, Section 171 subsection 2 is there, which provides that a notification can change that date. So even if there is a sunset clause, that notification can either be revoked or a new notification could be issued to extend the profiteering provisions to industry. So I don't see passing of this benefit will be a problem. The government certainly doesn't want the situation of robbing Peter to pay Paul. And hence, anti-profiteering will come into play. The benefits will have to be passed on to the consumers. The industry will have to be very, very careful. But I think from the industry perspective, what will be very relevant is that the methodology is there for the consumer durable items, for the real estate sectors and all. And if these methodologies can come at the time of this rate rationalization, I think both industry and consumer will get the benefit.
Well, that's an important point. As all of our guests are mentioning, the provision exists. Will it be re-notified is the question, the anti-profiteering provision as part of the GST regime. But let me get final comments from each one of you. And Abhishek, let me start by asking you, the compensation says there is no provision for it to continue beyond October, which is till the period till which the cess will be paid out. Now, if there were to be a decision taken on an additional levy, will the government have to do so by way of an ordinance till it goes back to Parliament? What will the way forward be if it does decide that there is a need for an additional levy?
So, Shereen, very clearly, a narrowly tailored cess with a distinct purpose is constitutionally sustainable. The only issue is that this amount goes to the Consolidated Fund of India. Once the amount goes to Consolidated Fund of India, it can be apportioned by the centre either on the basis of some event which happens or on the basis of some contingency which happens. So I think the centre gets that control on this additional distinct purpose, cess or duty, whatever you may call it. The centre gets the control of it, and the states must realize that there are still products which goes to 40%. Till yesterday, they were getting only 28% taxes on these products. Now 40% gets distributed. Effectively, the states get 70% of the GST collection. So the revenue collection for the states will also not reduce. So I think Consolidated Fund of India will have to be managed very, very carefully, and it needs to be a very tailored cess with a distinct set of purpose.
All right, gentlemen, before we say goodbye to you, information that's coming in from our colleague Timsy Jaipuria, we understand that at the council meeting, the states of Karnataka, Punjab and West Bengal have asked for a revenue loss estimate, and that is important. It's crucial that the revenue loss estimate is provided. They've also expressed concerns on revenue protection. Telangana and Sikkim also likely to have expressed concerns as far as revenue loss and revenue protection is concerned. The three GOM reports, rate rationalization, the life and health insurance and the compensation cess discussions and deliberations on the three GOM reports are currently underway. That's the inside story right here breaking on CNBC TV 18. This is exactly what's going on at this point at the GST Council meeting. Abhishek, Saurabh, Mr. Shah, always a pleasure. Appreciate you joining us here on the GST Centimeter. We are going to, of course, continue to bring you all the latest updates from the GST Council meeting. Stay tuned. We're back in a moment. Don't go anywhere.